try that again. Hi everyone. Welcome to the Thursday evening financial thing. Live stream about investing, peer-to-peer lending, and other things. I got my iPad open. I was going to try to read the chat comments while I was doing the stream, but apparently my iPad is so old that it doesn't work with the new YouTube app, so I got to update it. Anyway, welcome to everybody. Thanks for joining. We have a regular stream this week. It's been a while since we've done just a normal stream. I think about 4 weeks. We've had guests every single week for the last, I think, 4 guests, maybe even 5. This will be the last stream. Well, no, I was going to say the last stream in May, but of course it is June the 1st. But I'll probably have a stream next week. Not exactly sure what day. I know, I guess it could be on Thursday. I'm flying out on Thursday. I don't know if it's going to be on Thursday or not. Maybe I'll do a short half-an-hour stream on Thursday next week, but heading overseas, obviously, to the UK. If you haven't checked out the previous guests that we've had over the last few weeks, please go look at the archive videos. We've had tons of good guests. Cufflink, Capital Stackers, peer-to-peer finance news, to name just a few, Cufflink. And we'll be having more coming up in probably in August. I would say, do me a favor, you can hit that thumbs up button. It just takes a second, really helps out the stream. Thank you to the 3 people that have already done that. Appreciate you very much. And thanks for choosing to spend hopefully not more than an hour on a Thursday evening. So we're going to talk peer-to-peer lending today. We're going to take also a quick look at the trading 212 portfolio. We have a new addition into the portfolio. I'll kind of show you what's been going on. Stock markets have sort of been rebounding. They're in this really odd stage of just when things look like they're starting to improve, then you kind of get these pullbacks. But I don't know. I'm not convinced that we're out of the woods, but maybe I'm just who's that cartoon character where the sky was falling all the time? But yeah, you never know. We'll see. I think the chickens come home. That is the question. So, quick hi to Harley over there. Sponsored by Cufflink. You can see the Harley cam. She's having a good nap. By the way, if you have not checked out Cufflink, proud sponsor of the show. You can earn up to 9.73% gross per annum, over £250 million of property-backed UK investments made since 2016, and 0 investor losses to date. Capital is at risk. Please don't invest unless you are prepared to lose money, because as anybody that's been in peer-to-peer lending for a while, you know that it is possible to lose money. You can sign up at the link in the description or on the screen there, join.cufflink.com/financial-thing. We'll actually be taking a trip to the Cufflink offices next Friday to just have a snoop around, see what they're up to over there. So yeah, we'll see. Anyway, thanks everybody. Quick hi to Colin in the Peak District, Stephen Hale in Nottingham, Vince, Peter, other way around, Peter, Vince in Leatherhead, Paul Bagworth in Dawlish, Alan Stratford in from Gardening, and YSDR. I don't know what that means, but I'll say YSDR from Leicester, coming into the great summer here in the UK. I hope so. I do not want to land at Gatwick Airport and see grey skies and rain, please. So if anybody has any friends at the Met office, you can have a quick word with them. Please, sunshine, not too hot. Bob's your uncle. John Day is here in Nottingham too. Welcome, John. Nice to see you. Nice to see everybody. Let's get right into the news. We got quite a lot to get through, so I'm going to try to go through pretty swiftly today. So let's pull up the blah, blah, blah. There we go. If we can see that, I'll enlarge it just a little bit. Funding Secure realizations near £50 million. Funding Secure's administrator has recovered almost £50 million from the collapsed peer-to-peer lender's loan book, with investor payments expected to resume after 2 years. Not exactly sure what that means, to be honest. I mean, if you haven't logged into your account recently, go log in. I logged in yesterday. There was a little bit of money sitting in there, but it said I could not withdraw it. I know there's been some, I think some legal issue with what is it called? Quist Closed Trust, which basically means that there is an allegation the money that was loaned to Funding Secure was not used the way it was supposed to be used. So now that has kind of thrown a bit of a wrench, a bit of a spanner into the works. But I know if you haven't checked in your Funding Secure account, go check, because there's probably a balance sitting there. I think I got back about 30% of what I had left invested, so better than nothing. We'll see what happens with that. But the latest update, which came out recently, if you haven't had a chance to read it, you can. If you're a Funding Secure customer, you would have gotten this 16-page report. You could see here that the total realizations down here, £49.533 million, which, like I said, is better than nothing. It's obviously not going to make everybody whole, but it's absolutely better than nothing. We have a lot of fees, of course, involved in administration collections. It's just the way it is. These administrators are going to get paid one way or another, and it comes out of all of this money that is recovered. But at least something is coming back. Yeah. See, total withdrawals from investors amount to £24.4 million. The online platform was due to reopen on May 22nd, which it is open, but you just can't, at least as far as I know, withdraw funds yet. It said you were supposed to be able to do that by the end of May, but that has not happened. And of course, the administrative fees have amounted to £883,444 plus 20%, so close to £1 million of fees from the administrator billed so far. Unfortunate. If you like some dry material, go have a look at the report and see what you think. It is what it is. I've come to just have this amazing form of acceptances about these administrative situations of these companies that failed. And I had a really good lesson about diversification, not putting too much money into any one single platform. However, I do think that the days of these failed companies behind us now. The FCA is really tightening down on these companies now, so I think the ones that are in existence now will be okay. Never a guarantee, but just what I think. Landlord Invest, our friend Philip Karadagi, who has been on the stream before. If you haven't seen the Q&A session that I did with him, check it out. It's in the archives. Landlord Invest has reported a revenue boost between 2021 to 2022 for that year of 27.5%. However, the lender's profit for the year fell from £67,000 in 2021 to £9,704. So cumulative losses of £44,490. Look, it's not terrible. We'd like to see companies obviously making a profit. We've seen some huge losses that companies have posted, like Lending Works, in the millions. So 44,000, it's not the end of the world. They're probably investing in the platform, but they are increasing revenue, which is a good sign. That's a story we'll do at the end. Capital Rise has a live loan book, which is now up 125%. Capital Rise has seen its loan book grow by 125% to £138 million year on year from the end of March 2022 to the same point in 2023. They have now completed £280 million of lending in total. In the financial year ending the 31st of July, Capital Rise recorded a an 89% year-on-year growth in loans. It's paid out more than $46 million to investors in capital and return. The lender's gross profit margin for the period was more than 70%, with revenue tripling over the past 3 years. I just went into Capital Rise's offering. I know they're doing a Seeders offering right now, which they have actually gone way over the target. They're 149%. They were trying to get £1 million, which they've done on Seeders. So 1.49 million from 309 investors. So people seem to really like this share offering on Seeders. Again, I do not participate in this kind of thing. To me, it's very speculative. There's no guarantee of anything when it comes to buying private shares on the Seeders market. But I did go into Companies House, and I'm looking at the numbers here, and they have a valuation of £40 million. This pre-money valuation is pretty lofty. I don't know what their profits are exactly like. I'm certainly not an accountant, but if I'm looking at profit loss sheets, let's see if we can see it on here. Definitely shows you the income. I'm not sure I see a £40 million company here. That would need, what would they have to make, about £10 million in profit a year to get to that kind of valuation on a 3-year valuation. But people seem to like these Seeders type of offerings. Definitely, there's no lack of demand for them. So we'll see what happens. I just, the reason I mention this, I get asked a lot about Seeders campaigns, and some of these peer-to-peer lending platforms that do revenue generation by doing these crowdfundings on Seeders. People ask me, what do you think about them? And I always say I think it's really speculative. Of course, there's some companies that they're going to issue these shares, and the share price within the Seeders platform is going to increase, and sometimes it will decrease. We've seen some companies' share prices drop dramatically, but just be aware of the risks that you are going to be taking if you are involved in that kind of speculative investing through Seeders. This is just a story about them raising over £1 million to convert future fund finance. So, they seem to be doing the right things in terms of doing peer-to-peer lending and property bridging and stuff like that in the central London area. But Capital Rise, I've sat down with the CEO before. I think they're doing some good things. I don't personally invest through them myself, but something to keep an eye on for sure. So I got this letter last week. I don't know if you can see this. So here we go. Dear Mr. Samuels, the trial of Andrew Curry and Peter Curry concluded yesterday. Both individuals were found guilty. The FCA have issued a press release. I would like to take this opportunity to thank you for your time and assistance with this investigation. If you have any questions, do not hesitate to contact me. Now, we talked a little bit about the Curry trial, and that they are actually found to be guilty of fraud. I think it's one of the few times that I've seen, something come out in the favor that I was happy with when it comes to the FCA really pursuing companies. It took a long time for sure, but, it is what it is, and every dog has its day, as they say. So here in the Mouse in the Court website, thank you to them for covering it. Early today, a jury returned their verdicts against the two brothers. The two defendants, Andrew Curry and Peter Curry, 57 and 59, both denied 2 charges under the Fraud Act of 2006 and 1 charge under the Proceeds of Crime Act in 2002 in a criminal prosecution brought upon by the FCA. The first count of fraud alleges they dishonestly made a false representation to investors that the company Collateral UK Limited was authorized and regulated by the Financial Conduct Authority. Peter Curry was found guilty. Andrew was found not guilty. Second count of fraud claims the Currys abused their positions in which they were expected to safeguard and not act against the financial interests of the company by transferring $275,000 from collateral to Ori Developments Limited. Both Curry brothers were found guilty. Then we have a third charge relating to criminal property, converting criminal property, suggesting the Currys converted credits to the total value of about £372,000 to bank accounts owned by the brother Andrew Curry, knowing or suspecting it to be proceeds of crime, namely fraud by misrepresentation. Both Currys were found guilty of that. They will be sentenced very soon, in 6 days, on July 7th, 2023. It's a shitty situation. You know, it's one of those times where if we look at the companies that have gone into administration in the past, some of them have done so under the duress of wanting to wind down their loan book, and other companies, you know, allegedly, there has been some alleged fraud involved, and Collateral is one of the companies that has been found to be one that has acted by these Curry brothers in a fraudulent manner. We can take out the word allegedly now, which we have to use against the other companies that are allegedly being under investigation for some fraudulent activity. Lendy. Oh, excuse me. Yeah, Collateral, you know, the chickens came home to roost for them. We're going to see what the situation is with regards to people actually getting any part of their funds back. I know there is going to be some kind of a payout. I don't expect it to be much. I think it may be 10, 15% for some people, whatever you're invested in. It's a shame, you know, it really is. But you know, there's always going to be people out there that will take advantage of investors who are a little too quick to pony up their money without proper due diligence, like I did myself when I was very young into my peer-to-peer lending experience. I just threw money very naively thinking that everybody who was offering such an investment must be on the up and up. How gullible I was, how naive. And it's a real shame. It was very obvious that what the Collateral brothers did was they saw this, obviously, opportunity to have people throwing money at them because they were early in the peer-to-peer lending game. And then they were just basically taking that money and, you know, probably going on a holiday, depositing it in their both bank accounts. And this all came out in the court process. In December 2025, Peter Curry swapped the details of a separate company he agreed to sell, Regal Pawnbrokers, for the details of Collateral on the FCA registers. Over the following 18 months, the company was advertised as authorized by the FCA to persuade people to invest in loans on the Collateral platform. After this, Collateral not only continued to receive investments, but both the Curry brothers removed about $750,000 from Collateral client accounts, so that's money that you and I deposited on there. At around the same time, the Currys appointed, without informing the FCA as required, an administrator and transferred a further £88,000 from Collateral funds. Bad Curry brothers. Bad Curry brothers. You would take advantage of people like that. We'll see what the sentencing comes for them. I don't know. What do you think it's going to be? What do you think they're going to get sentenced to for that kind of fraud? Sometimes these sentences can be rather light. So I hope that it's a substantial, you know, punishment for them. Let the punishment fit the crime, right? As they say. Easy Money profits again double to pass £1 million. So Easy Money has made more than £1 million in 2022, twice the value of its 2021 profit. They have revenue growth of 5.1 to £9 million. So Easy Money, one of these companies that is making easy money, they must be charging some decent fees to be able to acquire that, or very high loan amounts as far as turnover and acquisition of loans. So again, really, really good news to see a company like Easy Money making a profit, because you got to have these companies making profits. If they're not making any money, eventually that's not going to end well for investors. So Easy Money making easy money. If we look at their accounts, on companies' accounts, by the way, I would suggest that every single one of you goes to companies' accounts and just checks it out whenever they release these financial years. You can sign up for alerts too, so you get an email when they file something. But you can see here, it is in fact true. The profit for the financial year is, and this is after tax, so net 1.08 million pounds. This is very interesting to me, just as a side note. If you look at profit before taxation, 1.1 million pounds profit, and they only pay 43 grand in tax. What's that, 3%? 4%? It's about 4%, isn't it? Now, I don't know anything about corporate taxation, because that is not my forte, but I know I pay way more than 4% on my income tax. It's really interesting that a company is able to only pay 4% taxation on their profits of over $1 million. Pretty interesting. This was a email that we got back on, well, I say back on today, June 1st. Hot off the press. Is this June 1st? Hot off the press. With the Bank of England's rate of base now at 4.5% and inflation remaining persistently high, double digits, the impact on household budgets continues. In response to these changing market conditions and investor feedback, Crowd Property has again taken the opportunity to review the rates of return offered on its first charge-secured property development projects. As a result, the business will be offering further enhanced rates of return on projects launched on the Crowd Property platform from this very week. Enhanced rates of 8 to 9% per year will be offered both for new development facilities and follow-on raises for existing project facilities. So I think most people have been seeing about an average of about, just a little bit over 8% returns. So you're going to get a little bit of a bump on your Crowd Property rates going forward. And I think this has been a trend on most peer-to-peer lending platforms. They're seeing that they can't continue to offer these lower interest rates because of the Bank of England rates going up and savings accounts rates going up. I got an email from Ford Money a couple of days ago saying the rates going up to 3.7%. I know I'm getting in a American money market fund now about 5.1% for a 7-day. Obviously that's a year, but and the yields change every week, but about 5 to 5.1%. So the fact that these companies are raising their rates to make them more attractive, I think, is an effort to really try to get new investors on board, and also to keep existing investors investing on the platform. Definitely a rate of 8.5 to 9% looks a lot more attractive. We've seen also companies like LoanPad raise their rates. Also Unbolted raises their rates. So that is good news. So we're going to see those new rates from this week. Speaking of administrators, Landlord Investors withdrew more than £700,000 in 3 weeks. There is still £1.8 million, this is in the mid-May time, of unclaimed money sitting on Lendy's platform. That is because some people have failed the verification process. So again, if you have not logged into your Lendy account in a while, I had a couple of emails asking me, how do I even log into my Lendy account? Well, you go to lendy.uk. It kind of makes me a little sick to go to this website, to be honest, after what they did, but whatever. And you got to scroll all the way down to the bottom. Some people don't see that. They just see this and think, oh, I can't log in anymore. But go to the bottom, click on this Visit Self-Select. And then right up here is a login button. You can see what's going on in your account there. But if you haven't logged in and you haven't completed that verification process, do so because there is about 613,000 pounds for people that are unverified that they will not be able to withdraw that until they become verified. So if you are not verified, go get verified and get your money out of there as quickly as possible. There's still 1.83 million unclaimed on the platform. Rebuilding Society, who I continue to reach out and try to get them to come on the stream. I'm feeling good this year. We'll have Daniel on here eventually. It takes time sometimes to get people to agree to come onto the stream. Sometimes they feel like they're going to get roasted a little bit, but nah, it's not what we're here for. We're here to bring the truth. Right, Holly? We're going to bring the truth about peer-to-peer lending. Just warms my heart. So Rebuilding Society, they've got a new low loan-to-value category with low rates for borrowers to make itself more competitive in the secured business loan market. Rebuilding Society said the new product will result in an increase of the number of loan applications on the primary marketplace. I think, personally, that Rebuilding Society has had a tough time attracting business. It's quite a competitive market out there for both the investors and the borrower side. So we'll see if this helps them. To be considered under this new model, a borrower will need to offer security over a property and will need to demonstrate an LTV, loan to value, no greater than 70% on a second charge, or an LTV no greater than 75% on a first charge. Personally, I don't know. That doesn't make a lot of sense to me. 70% on a second charge. I mean, that's high. I already don't like second charge lending. But I want to get Rebuilding Society to come on here and kind of talk about that and just explain what their thought process is on a 70% second charge LTV. They better be paying some high interest APRs to entice people to invest in loans at that type of LTV on a second charge. Look at that. Paul Auger, Cufflink has, by the way, if you haven't seen the stream with Paul, go to the Financial Thing YouTube channel. It's under here on the homepage. You can see right here, Paul and I went through an entire video. It's about 30 minutes of exactly how Cufflink screens and approves loans. So he talks about the entire process. He is the Chief Operations Officer. Again, it's on the homepage. It's not on the live stream section right there on the videos. The first video on the left. Go check that out. Paul was promoted to be the COO over at Cufflink. Their aim is to grow their loan book to between 350 million and 500 million within the next 2 years. And they are making some structural changes designed to supercharge their expansion. That's basically a couple of people getting promoted. But what I was very interested to see in this story is down here, and Paul had mentioned this to me as well as Heron, who we had on the stream too, that they are going to be upgrading the software. That's going to give Cufflink more software capabilities. I think it's going to make the back end better too, the UI better, all of that good stuff. So Cufflink that's one of my gripes, and definitely the back end, the user interface of Cufflink has gotten better. The dashboard is better than it used to be. That was one of my main gripes about Cufflink. I just didn't love the dashboard, but they are moving forward with some improvements there. Let's talk about LoanPad. We haven't talked about LoanPad in a while, but they have been increasing their interest rates, which, again, good to see that LoanPad is keeping up with that. See, they sent out a May monthly update. So they're pleased to report that more than 100 million pounds of loans have been repaid since the launch of the platform. That would have been 2019, so not that long ago. With the current portfolio being 80 million pounds or 184 loans, they have increased interest rates. Actually, this is May, but they've actually increased it to, this would be 4.6% now, and 5.6% on the premium, so 4.6, and they're going up on July 1st another 0.2, so that will be 4.8% in Classic and I believe 5.8% in the premium. So definitely becoming more attractive. They're also doing a tech upgrade. So they're working on a software upgrade that will enable them to provide users with new features over the incoming year. This will include simplified online ISA transfer requests, additional live data, linked bank accounts, and much more. Let's log in, take a look at what's going on. Cufflink, I think they're going to also have 13 lenders. Yeah, this is right here, 13 lending partners. We continue to see strong demand from borrowers. We expect a new lending partner in the mix very shortly with the first loan ready in due diligence. That will bring the total lending partners to 13. So I'll be doing a catch up with Louis probably the week after next, and I'm going to kind of talk to him about what's going on with these lending partners, who are the new ones, kind of get the background on the new lending partners, see what's going on the platform. They just seem to be really steady. You know, that saying, steady as she goes. I keep saying Cufflink. LoanPad is just really that steady ship, when offering these more attractive loan interest rates to investors is you know, it's not a bad place to put your money. If you just need to put it there temporarily, even, you can still get your money out in less than a day. Liquidity must exist in order to do that. But if we look at the live data of LoanPad, pull it up. Hang on just one second. I just got to log in. It's processing. See, total LoanPad loans, £77.7 million, 43% loan to value, total security of 181 million. So what really good loan to value? You've got 77 million in loans with a loan to value of 181 million pounds, 185 loans in total, at average of 420,531 pounds. We've got 12 lending partners, nothing in the provision fund, so no issues at the moment. And I mean, these numbers look really good. These numbers, look at this. Total repaid loans since inception of 2019, 101 million pounds. That's pretty cool. Let's go ahead and look just a little bit about, we do see when you go into your loan book, there are quite a lot of loans that are extended, some live extended, a lot of extendeds. But listen, this is real estate, property development. Loans do get extended. It's really normal. That doesn't necessarily mean these loans are in trouble. I don't think these loans are in trouble personally. I think they just get extended because that's the way property development is. If you've ever worked on a remodel or a building project, you're going to know that things never go to the timeline what you think they're going to go to. So you're going to get extended loans. So you're going to see that in your LoanPad account. But generally, LoanPad doing good things. I had a chat today with Unbolted for the first time in quite a while. Chris Brown from Unbolted reached out to me, said he was interested in kind of giving me an update on the platform and wanted to tell me about the interest rate increases over on Unbolted. You know, I've been investing with them for a little while. I don't have a huge balance over there. I was a little bit frustrated. I'm going to throw it out there that I'd reached out to the Unbolted guys a couple of times. I wanted them to come on the stream. They're a very small team, only 5 people, which is not necessarily a bad thing, but transparency is a good thing. So I reached out, wasn't able to get any really response, and then Chris reached out to me and said, hey, we're really sorry. We know we haven't been really good with outreach. This is why I've been brought on board. Like to connect with you. So I think we're going to have Unbolted on the stream in August this year, talk about what's going on there. But they have increased their interest rates. And by the way, I still invested with them. I mean, I think I'm getting 9%, something like that a year. Interest is very easy. Just put it on auto lend and there you go. So they have increased their annual interest rates up to, I think it's 9 now, if I'm not mistaken, or is it 9 or 8? See, the peer-to-peer platform previously offered annual rates up to 8%. So yeah, they've increased their rates up to 9%, which I think that's still a little bit low for, I'd like to see their rates. I think they're going to go over 10. I think they should be over 10. I don't think the Unbolted and what they offer is actually really that risky on the grand scheme of things, because they're basically a pawnbroking platform that not all of their loans are pawnbroking. Actually, quite a small percentage are pawnbroking. Most of their loans are, I think, a third of them are high net worth and business loans. But all of them are collateralized by assets. And what I do like about their pawnbroking loans is it's gold and jewelry, and it's easy to dispose of. You could sell that stuff at auction within probably a week to 2 weeks, or maybe a month. It's not like a property that takes weeks or months to sell, find a buyer. So really, for what they're offering, I don't think it's that risky. But it'd be nice to see them over 10%. I think their spreads are high. What they're getting in interest from their borrowers is pretty high. So I think they can definitely afford, as far as the cushions that they have, to offer lenders double-digit returns. But again, we're going to have them on the stream hopefully in August, kind of talk about Unbolted. And if you're interested in the statistics, you can see here 6,412 loans. This is as of the 31st of May. Well, cumulative loan amount 46.7 million have been repaid or renewed. I think their loan book right now is about 6 million. Another 589 loans with a cumulative loan value of 2.4 million have defaulted. But check this out. This is the beautiful thing about Unbolted. Of these defaulted loans, recovery has been completed on all 529 out of the 589, with a recovery rate of approximately 129% of net amounts due to lenders. So think about that. For every £1 that they have loaned out on default, they've gotten a £1.29 back. That's a pretty beautiful thing. So it means that they know, exactly how to value what it is they're loaning against, because when it's defaulting, they're able to get back more than they lent out, which means investors get paid back in full. That's a beautiful thing. So that's one of the special things about Unbolted. But you can see here, consumer loans against gold, 201. Consumer loans against non-gold, 306. So out of the 569 loans currently, 201 are consumer loans against gold, 62 are high net worth and business loans, and 306 are against non-gold. So there's things like pieces of art and collectibles, which, they're going to have default rates. You just can't get away from that. Things like that are going to default, but those default rates, I think, are really reasonable as long as they're less than 10%, as long as they're able to collect back the money that they loan against that. So they got some pretty good statistics. If you're interested, you can go to the bottom. Where is there a statistic? I know. Oh, anyway, I don't exactly know how to find it on the website, because I've always sort of struggled with that. I think you go to investing, loan performance, right here. So yeah, go to the investing link, and then here you go to loan performance, see those numbers. But it's an interesting proposition. It's very much set and forget. You really just don't have to worry about trying to do manual lending. It's very hard to do that anyways, because everything seems to get bought up pretty quick. The secondary market there's not really much available in the secondary market, so you're better off just sticking it on an auto lend and off you go. But again, have them hopefully in August on the stream. This is really interesting. Revealed secret talks underway to roll back financial promotion rules. So representatives of peer-to-peer lending companies, like executives, have descended upon the FCA, and I think they're pleading with them to allow them to offer financial incentives to sign up new customers. Now, there are companies that, things like stocks and share companies, they're allowed to do that to get new people on board, and I think peer-to-peer lending is feeling slighted, saying they should be allowed to do the same thing, which I agree with. So they've been having talks with the FCA to be able to offer things like cash back to new investors. But I don't think the FCA is going to roll back that rule. I think, at least right now, the FCA still seems to group peer-to-peer lending in that higher risk investment category alongside things like cryptocurrency, which I think is really unfair on the peer-to-peer sector because it's not the same thing. Unfortunately, those companies that have gone out of business have forced the FCA to sort of group peer-to-peer in that high risk. But the FCA is going to be warning firms that they will take swift action if they ignore their consumer duty. So again, that comes along with the FCA making it much harder for financial firms to operate, and especially operate poorly. They're going to be swift punishments, they say, if these firms do not toe the line and do the right thing. Here's one example right here. Peer-to-peer lending firm was censured under the financial promotions rule. So one peer-to-peer lending company, which they have not named, I don't know who it is. Nobody seems to know except for people at the FCA. But they were obviously advertising some kind of financial promotion online, and they got their wrist slapped by the FCA, blah, blah, blah. So they are actually carrying out their threats to where they are making sure if they don't operate properly, you can see this other news, they are really scrutinizing existing and new firms. They are only authorizing 1 in 5 companies, which is actually up a lot because there used to be 1 in 14 in 2020. Let's see. 1 in 14 from the previous financial year, so that would have been 2020 and 21. So in 2020 and 22 it was 1 in 5. So they are actually authorizing more companies, but they're still doing, I think, a much tougher scrutinization. It's taking about 6 months to a year to get the FCA authorization application reviewed and the process looked at. So it's pretty time consuming if these companies want to get their license. Here's an example of somebody, Mr. Roy Warren, who we spoke with from Folk to Folk. Again, if you have not seen that, go on the YouTube channel, go onto the live link up here at the top, and you can see Roy Warren, Folk to Folk. Where is he? There he is down here. There's that video. We had Roy and Gary on April the 27th, so check that out. But he is saying not all peer-to-peer lending is high risk. He believes that Folk to Folk is not as high risk as people believe and the FCA believes. And he's a little annoyed that the FCA warning is grouping peer-to-peer lending in with higher investments such as crypto assets. And he certainly doesn't think that Folk to Folk or peer-to-peer lending in general belongs inside that bucket. Is he right or is he wrong? What do you think? I think he's right. Although I don't necessarily think crypto is as risky as some people do. Bitcoin, not so much. Some of the other cryptos, yes, for sure. But Roy thinks that peer-to-peer should not be grouped at all with cryptocurrency. I agree. Let's see. One little note. I wanted to just bring up this point. There's been a lot of fraud happening online. This is not peer-to-peer. This is just a general warning to anybody out there. I have a family member right now that is involved in being taken advantage of through an online situation. So I speak through personal experience. It is easy for somebody in the know to look at this and go, wow, I see this fake email. I could tell this is not an email from the real company. You can simply usually look at the email address and see that it's some kind of Gmail account. Sometimes you get email addresses from credit card companies, or I get them from Barclays all the time, and they're not real. But somebody who's not in the know, maybe an elderly person or somebody that's not just very informed about this kind of stuff, could quite easily click on one of those fake emails or even fake websites and put their login information and just get their funds stolen So just really be aware. And we see over 1.2 billion was stolen by criminals, authorized and unauthorized fraud back in 2021. That's about £2,300 every minute. So just stay vigilant. Watch out on those social media accounts. I had a situation yesterday where an old friend of mine messaged me through Facebook, and I could tell their account was being hacked because the way that person was messaging me was not the way that my friend messages me. And they were talking about some financial thing that they were going through. So it could, these fraudulent situations can come in forms that you wouldn't necessarily spot straight away. But it's happening. A lot of people are getting ripped off and falling for these things. So be careful. Peer-to-peer marketplace is predicted to expand into new assets and adopt AI. The reason I bring this up is because AI has really been seeing sort of this investment bubble. I think this is kind of reminds me of the dot-com bubble in 2020. The year 2000. When any company with the name .com, their stock price was just shooting through the moon. It's happening right now with the AI stocks. Be very, very careful if you're looking at those stocks thinking, I can, make a lot of money and everybody's making money. I'm just going to jump in. I think the thing to remember when it comes to investing is if everybody's jumping in, you are way too late. You probably need to be jumping out, because that's usually when, the paper bag gets really wet at the bottom and everything falls out. All of your supermarket goods just falling out of the bottom. So if you are looking at AI stocks and things like that, be very careful. I think these AI companies are not making any money. Nobody could really figure out exactly how they're going to make money. I think maybe the only way is acquisitions. Maybe I'll be proved wrong about that. But I did think about, maybe I should be jumping into some AI short-term trades in the Trading 212 portfolio, but I'm feeling a little apprehensive about doing that. And certainly for a long-term investment, I think it's probably too late at this point. You got to get in early on these things. When everybody's piling in, that's when you should be piling out, I believe. So what's going on in the portfolio? We haven't really looked at this in a while. I can see here the account value, £14,641. So really been hovering in that mid 14K range. Remember, this was almost 19,500 at one point, so down quite a bit. I've added, you can see the portfolio is really consolidated right now, but I've added this new position, Canadian Overseas Petroleum. You can see I've done really well. This has been a home run, grand slam. I'm down 12%, and that's only in a period of, I think, a week. So good job, me. So not off to a great start, but this is going to be a bit more of a long-term hold. I may even pick up a little bit more. This is super risky COP. It is a Canadian overseas exploration company, exploration, acquisition, ID, development, production of oil and natural gas. I hold interests in petroleum assets in the U.S. and sub-Saharan Africa. High risk, but could be a high reward on that one. We'll see. Deutsche Bank not doing really well, minus 13% on that. Flex Natural Gas has come down a ton. I mean, this was up at 40% in the green. Now we're at 18, so that's had a big pullback. We've seen petroleum stocks really pull back too. Calera was really stinking up the joint. Made a bit of a positive increase on that. We saw the stock price was down in the 1.9, so $1.90, and now we're back up to 253. I almost sold some of this, half of it. I'm glad I didn't. I was thinking, no, I've got to hang on to these things more long term, because that's the whole plan of this portfolio. In some cases, if you believe you have a thesis on a company, you just stick with it. That's the emotional side of trading, right? When you're trying to trade stocks, buying and selling, you're going to make the wrong decisions at the wrong time, and this has been the case in this portfolio in some ways. Norwegian down 11%, and Vermilion Energy, this one has just been very painful, 43%. We've done very well with Vermilion in the past, but now that's not good. The average price of purchase of this was $18.85, £15.76. Now we're down almost 50% on that. So, you know, the one good thing is if you do need a tax write-off, you can sell one of these stocks at a loss, take the tax hit, get some credit on your taxes, but it's not really ideal. Really looking for a strike point to deploy this 6,500 pounds. I don't know where that's going to be. I'm just sitting back right now because I think the markets are just acting really odd at the moment, and they just seem to be, they're on an upswing at the moment, but is that going to continue? Who knows? So I don't have much of a plan. I'm just going to be honest for the 6,500. I don't have much of a plan today of what to do with that, but I was kind of waiting to see what happened with the U.S. debt ceiling situation, which appears to be just, again, they're putting a thumb in the proverbial dam, trying to block the huge leak that's coming out with the situation with the debt, but they seem to have got it figured out. That's obviously been a cause of some of the stock rallies. We'll just have to see what happens. I don't know. It's a tough time to be an investor. I think most people, it's best just to stick to the long-term strategy of buy and hold, accumulate, don't make timing mistakes like I have done. You don't want to do that. It's a bad idea. Anyway, we've been going, almost an hour. So, yeah, if you can subscribe to the channel, if you're not subscribed, that would be great. Hit that thumbs up if you can. I'm just going to have a browse of your comments. Yeah, anyone else go for the Capital Stackers loan? Actually, I'm very close to opening an account with them. I was swayed by the interview that we had with Capital Stackers. I really like what they're doing. I'm not going to lie, so we'll see. Hi, Mark Mason. Nice to see you. Sunny in Gatwick now. I can't come yet. Anyone using simple crowdfunding? No, I am not. I don't know. Just scrolling through your comments. Yeah, Axia Funding posted a new loan today. Went quickly. Yeah, if you're not familiar with Axia too, they fund legal litigation cases. It's an interesting line of crowdfunding, peer-to-peer. I mean, litigation funding is that's they've got to take on litigations that they really believe they had a good chance of winning, because you're really relying on the decision of a judge, and that could go either way sometimes. Some comments about LoanPad, their rates. I think their rates are really reasonable for the risk that you're taking with them. I mean, it's really, really low rock bottom, 5.8%. What more do you want? I mean, it's not as low as a bank savings account, but it's not that far off, I think. Of course, it's not insured by the FSCS. Interesting comment. Unbolted keep more interest with themselves and they passed on to lenders. Yeah, I mean, they're in a business to make money. They're a lending outfit. I think you'll find that with every single peer-to-peer lending company. They're going to make more money than they're going to pass on to investors. That's what they're in the business for. Theirs is definitely a lot higher than most. Alan Stratford, been on with Unbolted for 5 years. Have averaged 8.9% per year so far. I like them a lot. Yeah, they've been going for a while now. I think I'm in my 6th year with them. I think the FCA is doing a better job than they used to. How about that? I think the video got ChatGPT to write the latest earnings forecast. That's funny. Yeah. CSH2. I keep my spare trading 212 cash in CSH2 money market ETF. Oh, okay. I didn't know about that one. I'm going to check that out. Thank you. Capital Stack has put me off at £2,500. It's a fair watch to have available. Yeah, they've got a pretty high minimum. That's the only bad thing. Long-term weather at Gatwick is good. Excellent. Glad to hear. Okay, going to get out of here. Keep your eye on next week. I will send out an email notification. There'll be a notification in the Facebook group as always. If you haven't joined that, go join the Financial Thing Facebook group. The link is in the description below down there. Again, thank you to everybody who is subscribed as a Patreon supporter. I very much appreciate every single one of you in support. I'll be back next week, hopefully. And then that will be it until July. So we'll be taking a couple of weeks off, probably about 3 weeks off for a little holiday, work holiday. And then we'll be back. So from myself, the sleepiest dog in the world, Harley, we bid you adieu. We'll see you next time. Thanks again for joining. That's all I got for you today. Take care.